And welcome to Market Overtime. I'm Sam Vadas. Our next guest is an MIT graduate, an Air Force Reserve member, and an inventor with close to 50 patents under his name. All impressive titles, but you probably know him as the pioneer in Bitcoin. I'm very pleased to introduce now Michael Saylor, Executive Chairman of Strategy. Welcome to Market Overtime here on the Schwab Network.
Thank you for hosting me.
First and foremost, congratulations on becoming the first Bitcoin treasury company to be rated by S&P. How does it feel and what does it mean?
Well, I think it's a very legitimizing step. It's auspicious for the industry. This year, we launched 4 digital credit instruments, Strike, Strife, Stride, and Stretch. They were all IPOs. They all publicly trade. Those are backed by Bitcoin. And they've been very successful, but they've been unrated. And so many fixed income investors and insurance companies and large pools of capital, they would like to buy them because they have superior yields. They're really cool instruments, but they can't without a rating. And so part of the maturation of the entire asset class is getting the traditional credit rating agencies to begin to acknowledge digital credit. And this was the first credit rating of a Bitcoin treasury company ever in the industry. And we've been at it for 5 years, so I think it's a big milestone.
It certainly is a significant step, and I just want to sort of talk about what you do, because you mentioned some of your product offerings, and we will dig into that in just a little while. But what is the best way to understand what you do and how?
Well, it all starts with Bitcoin, a digital commodity. Bitcoin is digital gold. It turns out that it's also a global asset. It trades 24/7, 365. You can sell it short with 20x leverage on a Sunday morning, and then you can reverse and go long 40x a few hours later from Singapore, cross-trading with someone in Europe. And that makes it very volatile but very desirable, and for a conventional investor, makes it a little bit scary. The history of Bitcoin for the past 5 years is it's been appreciating about 50 to 55% a year, and it's been about 50 vol, so 3 times as volatile as the S&P index. If what you wanted was 50% ARR and 50 vol, then you would just buy the raw commodity. But it turns out that if you walk down the street and you ask people, would you like to generate 50% returns a year, but you might wake up and lose 25% of your capital in 1 week? Most people don't want that. So they don't like the volatility. What our company does is we buy Bitcoin, and then we issue credit instruments against Bitcoin. So for example, some people would like to have 75% of the upside, 5% of the downside, and an 8% dividend while they wait. That's a convertible preferred, and that's what Strike, STRK, is. It's most of the upside of Bitcoin, very little downside. It's like 6-7 times over collateralized, and it's a dividend. Other people, they don't want that. They just want, for example, 10% dividends forever. I don't care about anything more than that, but if you pay me 10% dividends forever, that's interesting. So we just take an asset that's very volatile that we expect Bitcoin to go up 30% a year for the next 20 years. Mm-hmm. We expect it to go up more than 20% forever. So it's not a problem for us to give 10% dividends because that's our business model. But for the investor would like to see that we're 5x or 10x over collateralized, right? So for every $10 billion of Bitcoin we own, we might sell $1 billion of that credit with that $100 million a year dividend stream. And so you're the credit investor, you're just getting that pure yield. And from our point of view, we're paying 10 and we're getting back 20 or 30, right? So it makes sense for us. And then, there are other flavors, like we created this product, Stretch, STRC, which is a treasury credit instrument. The idea of that is it's just a high yield bank account. Like we'll give you a bank account, or we'll give you a money market type instrument that pays 10% yield, and the idea is for it to be a 1-month duration, so we strip all the volatility away. We target a $100 par value. You take cash that you don't need for 6 months, but you want to earn 10% instead of earning 4%, and you buy that instrument. Now, you don't want the upside of Bitcoin. you don't want to buy, a lot of people don't want a 20-year bond. What they want is they want a money market, right? And so you don't want infinite interest rate duration, you don't want delta, you don't want volatility, just give me pure yield. That's probably the most refined digital credit instrument. So what our company's doing is we have a lot of capital. We have about $70 to $75 billion worth of Bitcoin on any given day. We sell those credit instruments, and we have about $6 billion of those credit instruments outstanding. They're so way over collateralized. Then we generate various types of dividend streams or upside with them. As it turns out, we expect Bitcoin to appreciate 30% a year, but we don't pay more than 10% to 12% dividend streams. So our common stock shareholders get the excess. So what happens is we take that volatility and performance of Bitcoin and we strip the volatility, the risk, and the performance off, and we sell you 10%, 12%, 8% as a credit investor. And then the extra performance and volatility goes to the equity. So MSTR, which is our common stock, is more volatile, higher performance than Bitcoin. And what you have is some people want more Bitcoin performance and they want to be on a roller coaster and they buy the common stock. And some people want less and they just want the pure dividend stream. And of course, the people that just love Bitcoin and they don't want any counterparty risk, they don't want owner security, they just buy the commodity Bitcoin. And so that's how we sit in this ecosystem.
Right, so it's almost like a levered bet. I mean, it's a way to be exposed to Bitcoin without having to actually buy the actual commodity itself. There is so much to unpack there, Michael. I mean, you just talked about, how much Bitcoin you have, $75 billion. Just talk to us about how much that actually represents and what's your end game here?
Well, we own about 640,000 Bitcoin, and that's about 3.1% of the network. 3.1% of all the Bitcoin that will ever exist, we have acquired. Most of that we've acquired with equity capital, about $50 billion plus of common equity, about $6 billion worth of preferred equity. And so the company is substantially equity, and our primary business line is to issue this credit instrument, and every year we sell a bit more equity and we sell a bit more preferred equity and we buy more Bitcoin. So like this week we bought like 390 Bitcoin. Every week we'll acquire a bit more and we just continue to grind up. And as we do that, Bitcoin becomes more scarce. And because we're buying so much of it, that means the price over time has to appreciate because all the natural sellers get taken out of the market and no one wants to sell unless you raise the price for it.
Right, so you are really a pioneer in what you do with regards to Bitcoin treasuries. I mean, how many companies are out there now doing what you do, and do you welcome that?
Yeah, in August of 2020, we were the first public company to make any meaningful commitment to crypto assets or to Bitcoin specifically. And we bought $250 million worth of Bitcoin in August. And then we followed up with another $175 million a few weeks later. We were the first. Then came Block. Then came Tesla. Then came half a dozen or a dozen other Bitcoin miners. And by about a year ago, there were maybe 60 companies that owned Bitcoin, and then it doubled, and now I think there's probably 180 companies that own some amount of Bitcoin on their balance sheet that are publicly traded. We're 10x larger than the next largest one in terms of holding, so we're the 800-pound gorilla in the space. I think probably 1.1 million Bitcoin are held by public companies, and we own about 2/3 of it. So we're the largest player. We're the first ones to actually issue digital credit instruments like these preferreds that are trading in the public market. But I expect that others will follow. There'll probably be about half a dozen companies over the next 12 months to 24 months that will follow and issue those kind of credit instruments. We welcome those companies. I mean, the truth is every single company that capitalizes on Bitcoin takes more supply. There's only 21 million Bitcoin ever. So, if Microsoft turned around tomorrow and bought $100 billion of Bitcoin, that would be great for us. right? So the more companies that buy Bitcoin, the better. Most are just capitalizing on it. They're just buying it in lieu of holding treasuries or holding cash, right? It's like a company can own real estate, a company can own any other asset, a company can own Bitcoin. So most do that. There'll be a few pure play treasury companies that will also issue digital credit against their underlying Bitcoin, but you need to have, more like $10 billion of capital before you can get to critical mass where you could do 500 million and billion-dollar IPOs of credit instruments that would be liquid in the market.
Okay. Let's just take a step back. I mean, obviously you founded Strategy in 1989. I just want to get a sense of what Bitcoin is to you. I mean, you've called it digital gold, but you've also talked about how, the fact that it's evolving faster that people can digest, but also the fact that there's a lot of criticism out there and it will continue to be misunderstood. How do you speak to that? I mean, how do you reassure the markets about what you're doing out there?
The best way to think about Bitcoin is it's the world's first example of a technology that allows individuals or corporations to tightly bind economic energy to their person. Like if you have 100 families and they all have some money, but they don't trust each other, they don't trust their bank, they don't trust their government, they don't trust any company, but they want to keep their money. So they come up with the idea of a digital bank. You write it in software, and the digital bank has 21 million coins, and anybody can buy any amount of the coins in the bank, and that becomes their bank in cyberspace. Now, the question is, who runs the software? Well, I might trust you, but I won't trust your great-great-granddaughter. So we all run the software. Everybody runs the software, and then the software continually cross-checks everybody else. And so it's a very elegant, decentralized way to create a property network or a decentralized banking network. It's a protocol for economic prosperity, right? So it's like you speak English, I speak English, we can communicate. You use Arabic numerals, I use Arabic numerals. We could do math together. When you offered me nine bananas, I know what 9 is, right? Because we both use the same numbers in the same language. Well, what if we want to trade together and we don't want to rely upon any government or any bank and we want to do it for 1,000 years? So Bitcoin represents that breakthrough. It's the first time in human history that an individual can own anything without asking the permission of someone more powerful than them. If you have 1,000 Bitcoin and you have the private key, nobody can take it away from you. You can carry it with you. You can send it anywhere on earth. You can take it with you to the grave. You solved the problem that the pharaohs in Egypt couldn't solve. How do you take your money with you, right? So that's a big idea. Let's just call it a bank in cyberspace where you put your money and no one can steal it. And it's currency in the sense that there's never going to be more than 21 million. So when you buy a Bitcoin, you're buying 1/21 millionth of all the money in the world forever. That's the idea. What do we call that? I call it the world's reserve capital network, right? It is capital. What is capital? Long-term store of value. You're a rich person. Where do you save your money for the next 100 years? Not in a currency. You don't buy pesos, you don't buy euros, you don't buy the US dollar, you don't buy the yen. If you're a rich person and you want to save your money for 100 years, you're buying equity, private equity, public equity. Maybe you're buying scarce desirable art. Maybe you're buying real estate, commercial real estate. So the capital assets of the 20th century were like the S&P 500 index or New York or London real estate, or maybe sports teams if you're lucky enough to be able to buy one. But what Bitcoin represents is digital capital. Right, if I have a bank and it's a network, a bank, I can move the money. I can move $1 billion from here to Tokyo in a few minutes. So then that way it's a network. But it's also capital itself. If I gave you $10 million and I dropped you in the middle of Africa, and I said, buy anything you want, buy any equity, buy any land, buy anything, buy any bond, buy anything, but you got to keep it for 30 years in Africa. Or I said, or you could buy $10 million of Bitcoin, and by the way, you can send it to Singapore or London or Paris or New York in 2 minutes from your phone. Mm-hmm. I would submit to you, there's not a single thing you would buy in Africa. There isn't the capital asset that you want to give to your family or your great-grandchildren. The same is true if you actually talk to people in China. They don't want to keep their money in China. There's a law against removing it from China. In Russia, in Ukraine. If you talk to Europeans, they don't want to have their money locked down in any country in Europe, right? They want to have their money. Where do people want their money? They want it in the U.S., right? How about Brazilians, Argentinians, Venezuelans? Most of the world doesn't want to take all of their family's wealth and store it locally in real estate, local stocks, local currency, local banks. That's why there are laws against them removing the money. And the problem with gold is if you have all your money in gold in Africa, you can't take it through the airport. You can't take your, if you have all your money in gold in Argentina, you can't bring it out of the country. So the value of Bitcoin is it's digital gold. So if you have your family's assets in Bitcoin, you can take it anywhere you want. No one can stop you from removing it from the jurisdiction. And the more insecure you are about the country you live in, the bank you do business with, the nation state you rely on, or your economic future, the more desirable it becomes. So in a nutshell, Bitcoin represents property rights for the human race. It represents economic prosperity, and we'll call it colloquial digital gold, but it's 100 times better than gold. You cannot teleport gold from here to Tokyo with the blink of an eye, right? And if you have gold, I can shoot you and take your gold. If you have Bitcoin, I can kill you, but I don't get the Bitcoin. And so it is a state change difference in the economic vitality of an individual, a company, a family, a nation state, the human race. And so that's why all of us in the crypto community, we really we revere Satoshi, and we think about the world before Satoshi and after Satoshi, because before Satoshi, everything you owned was subject to the permission of someone more powerful than you. And after Satoshi, after January 3rd, 2009, you could own something for yourself that no one can take away from you, and that is what's caused the entire 750 million person crypto movement.
And it certainly has been gaining traction. I mean, crypto has got so many tailwinds this year. I mean, more regulatory clarity and support, more corporate adoption, institutional appetite, and also legislative wins. I mean, which one has been the biggest tailwind for the space, and what continues to drive it higher?
There's been about half a dozen massive milestones in the past 24 months. The first one was the approval of spot Bitcoin ETFs in January of 24. And that sparked the explosion and the explosive success of IBIT, which went from $0 to $100 billion in less than 2 years, and it's the most successful ETF in the history of Wall Street. So that was a big deal, the endorsement of the SEC. The second big deal was the red sweep in November, when you had a pro-crypto, pro-Bitcoin administration. We went from one supporter in the cabinet, Gary Gensler was a Bitcoin believer, 1 out of 12, to all 12 cabinet members, the president, the vice president, the head of the SEC, the head of the CFTC, the head of the Treasury, the head of Commerce, the head of RFK, the head of the Housing Authority, Bill Pulte, Kelly Loeffler, and Howard Lutnick. So you all of a sudden have 12 positive cabinet members from one, and that was a big deal. The third big milestone was FASB's adoption of fair value accounting for crypto assets. Before that point, and that took place at the beginning of this year, beginning of 2025. Before that point, if you're a public company, you could mark down your losses on Bitcoin, but you could never realize the gains. Right? It's literally an asset where you could only lose, you could never win. Right? So the entire accounting rule was a deck stacked against you. And so fair value accounting meant that our equity, for example, went from $3 billion to 50 plus billion in 12 months. Right? But if it was not for fair value accounting, we would still have $3 billion instead of 50 billion. So that was very prejudicial and hostile accounting, and that flipped in January. I think the fourth big milestone is all of the pro-crypto and pro-Bitcoin guidance that came out of Treasury, the OCC, the FDIC, and the Federal Reserve. And And the key point there is most banks in the United States and the rest of the world were afraid to custody Bitcoin. They were afraid to lend against it. They were afraid to do business with it under the previous administration. And I think the guidance that came out of the current administration delivered a message, which is not only is it safe for you to custody and extend credit against these assets, it's really imperative because the United States wants to be the crypto capital of the world, and we want to lead in digital assets, and that means our banks need to lead in digital assets. So that you can attribute to the President and to the Secretary of the Treasury, Bessent. I think the next thing was the passage of the Genius Act, championing by Senator Haggerty, and that created a stablecoin environment in the United States. And the idea there is, why can't we tokenize the US dollar and ship $1 trillion of it to the rest of the world, or maybe $10 trillion of it to the rest of the world? Because money wants to move at the speed of light, and this is the critical part of the crypto ecosystem. So people, the last two banks that moved crypto dollars around were Silvergate and Signature Bank, and they were assassinated by the previous administration. They were shut down on a weekend for no good reason. They were perfectly well capitalized, and they were literally murdered by regulators. So you can imagine that the banks were afraid to get involved with crypto under the previous administration. You know, getting a supportive White House, a supportive cabinet, a supportive head of the Treasury, and then a law that says that it is legal for you to do this, I think was pretty important. Then that has resulted in an avalanche of institutional adoption, and now you have companies like JP Morgan, right, and Bank of America, and Wells Fargo, and BNY Mellon, and PNC Bank, and Citi, that are all announcing their support for this asset class. And if the trillion-dollar banks are willing to custody, and they're willing to extend credit, and they're willing to handle the asset class, and they're willing to bank the crypto industry, that's really the necessary condition to 10x from here. Like, Bitcoin got to 100,000 without their help, but getting to 1 million requires the banks to bank the asset. And so the next 4-year period is really about banking Bitcoin and the support for digital assets in general by the major establishment of bankers in the United States. And everybody else in the world, right? You can imagine the bankers in Australia, Canada, Singapore, the Middle East, and Europe, Mexico, they all follow the U.S. banking standard. And so what you have is an avalanche or a sea change here, and the headwinds have become tailwinds.
Okay, so that's what got us here. Let's just talk about the short term, 2025 year end. Where does it end up? Because I've heard everything from 100 to 200,000.
Yeah, well, the consensus of all the equity analysts, and there's like a dozen of them that cover our stock, is north of 150,000. Our corporate guidance is targeted at $150,000 by the end of the year.
Right. Okay, and sort of looking further out, have you got a sort of a 2030 target?
I don't have a specific target, but in the 4 to 8 year time frame, I think Bitcoin goes to $1 million a coin. My 2021 year expectation is Bitcoin appreciates about 29% a year for 21 years, and that leaves it at $21 million. Yes. 21 years from now. So I think that Bitcoin will appreciate in the range of 29 to 30% a year for 20 years from this point.
Okay, you seem to like that number, 21. Just as far as what we have to work with through the end of the year now, I mean, you know, is there a favorable macro environment to support that as well?
I think the drivers right now will be Fed decisions with regarding monetary policy. Clearly, that drives every asset class, and we've had a fairly tight monetary policy right now, and if that policy loosens, that'll be a driver. I think other than that, the industry is volatile, and the primary actors in this case are the banks. And every time a bank makes a major announcement about Bitcoin acceptance or crypto adoption, those are all very positive for the asset class, and those should come progressively.
You know, it's interesting, just as far as the more recent price action that we've seen off the back of October the 10th. I mean, we did certainly see a risk on for equities, but it feels like Bitcoin's kind of been stuck and sort of lost the momentum. Why is that?
I think it's a $2.5 trillion asset class that's been unbanked. So imagine that you started a company, NVIDIA, and you gave 90% of the stock to the employees, and they went from $1 to being worth $3 trillion, but no bank would give them a loan against it. Mm-hmm. So you're an employee, you've got trillions of dollars of capital gains, but no one will give you a nickel loan against you. You cannot get a loan. You could post, you have $10 billion of Bitcoin, you can't get a $1,000 loan from a major bank right now. So what happens is the OG crypto holders, the ones that actually had the capital gain, the only path they have the liquidity is to either rehypothecate the Bitcoin and it gets shorted in the market, or to sell the Bitcoin. So I think we're working through a period where 10% of the supply, or it wouldn't. What percentage of the equity in your big tech company would be sold by employees? When they all got insanely rich, probably 10, 20%, right? They would sell at least. So we're waiting for that to boil off. And we're at the point where everybody knows that Bitcoin is digital gold and it's got institutional acceptance. But banks are very careful, bureaucratic, and process-driven creatures. And they should be, right? I mean, if banks get out of control, right, there's hell to pay. So I think it'll take 4 years for the conventional, traditional banking establishment to get spun up, where they're custodying the asset and they're extending credit against the asset. And it's worked its way into systems, right? I mean, Bill Pulte has directed Fannie Mae and Freddie Mac to start to recognize this as good collateral, but how long will it be before you can post your Bitcoin as part of your conforming loan collateral? And it's a government, quasi-government type agency, and the credit rating agencies, they're starting to cover us, like we just got covered by S&P. But how long before they acknowledge Bitcoin as collateral or capital that's just as good as holding a share of NVIDIA stock or Apple stock? And I think, reasonably speaking, that's a 2 to 4 year adoption curve. So between 25 and 28, the traditional finance infrastructure to bank and collateralize and issue credit against this will come online. When that happens, if you think about every asset class, if you can't get a loan to buy a car, and if you can't get a loan to buy a house, what happens to car prices and house prices? Right? At the point that the credit market forms over the asset class, the prices move up. So what you see right now are the bank credit markets, the corporate credit markets, right, and the public credit markets are forming on top of Bitcoin. And as they form, that's going to be very positive for the asset itself.
It's about those believers, isn't it, as you say? And you actually have previously said that each quarter you gain more believers. Can you give us a sort of sense of what you've seen in the most recent quarter?
Well, I think that we started with the early shareholders of Strategy. They were Bitcoin and crypto believers who were prohibited from buying Bitcoin due to regulations in the various markets. So you're a Bitcoin believer and you're a retiree and you live in the UK and you have all your money tied up in your UK retirement plan. It's illegal, impossible to buy Bitcoin with that money, but you could buy a stock, so you'd buy MSTR. Same in Australia. Actually, everywhere in the world, there are large pools of capital that are tied up in these tax-advantaged accounts, IRAs, 401ks, et cetera, where you might be able to buy a security, but you can't necessarily buy, you can't just say, I want to buy a bunch of my favorite artist paintings that are, at Art Basel. So the early believers were the crypto enthusiasts that had capital tied up. And mainstream investors, big investors that actively manage funds at Capital Group or Morgan Stanley, that they believed in the Bitcoin thesis, but they had pools of billions of dollars that were mandated to make equity capital investments. 99% of the professionally managed money is mandated to equity or credit. They can't invest in a commodity. So So we offered the first equity to the equity capital investors. And what we followed on next was a set of convertible bonds. We became the biggest convertible bond issuer in the world. And they were the most successful convertible bonds, and there was a lot of money earmarked to convertible bonds. So after we became a substantial part of that market, we outgrew it. And then we went on to preferreds, and in the preferred market, we started creating these publicly traded digital credit instruments. They were targeted at a different user base. I mean, the person that wants to collect a 10% dividend forever, but they don't want the Bitcoin upside. It's like, okay, I hear you when you say you expect 30% a year for the next 20 years, but just guarantee me the first 10 and you can have the next 20, but take the volatility away and then take the risk. Like, right? There's a lot of people that would rather have 10% after tax with 1/100th the risk, right? Yeah. And so that's a different class of investors. So we have rotated from the true believers to the hedge funds that, like, you know, the Millenniums and Soros and Citadels that wanted to trade and hedge the convertible bonds, to the credit investors that want long duration, sophisticated credit. And then with Stretch, it's just money market investors. I have some money, I just want more than zero, but I don't really want to risk the principal so much. And so that last set of investors are, you know, retirees, mainstream retail. I think we had $600 million of retail demand for our Stretch IPO in 2 days. So in 48 hours, we had $600 million of demand, and that was an order of magnitude larger than the retail demand for our other, you know, instruments. So right now, this is migrating to family offices, you know, retail investors, high net worth individuals, and of course fixed income investors like, you know, PFF, which is like BlackRock's preferred fund. I think like 3.5% to 4% of that fund is invested in our credit instruments, which didn't exist 12 months ago. So we're now starting to move into credit indexes. Of course, you're a credit investor, you have to buy credit. You're an equity investor, you have to buy equity. We're also in equity indexes. For example, our biggest shareholders are Vanguard and BlackRock through their passive equity index funds. So there's a lot of pools of capital in the world. Some of them, if you lived in Africa and you needed to flee the country and you didn't trust your bank, I would say buy Bitcoin, put it on your own hardware wallet, because you can't trust the bank.
Right.
But that's one class of Bitcoin investors. But if you're an investor in the United States and you have pools of capital earmarked to equity or credit, then you probably want something created by a company like ours.
There had been a view out there that crypto was uninvestable without the regulatory framework and guardrails in place. But we have seen these sort of legislative wins, as you mentioned, and we still got to 100,000, to your point, without that. I'm just wondering, you know, talk us through Strategy's involvement in the latest legislative efforts now to really regulate and create those guardrails and construct the infrastructure for everyday people to understand and access and have that exposure to crypto.
If you look at the digital assets industry today, you can divide it broadly into two segments. One segment is digital capital, and that is Bitcoin. It's dominated by proof-of-work networks. Bitcoin is 99% of all the energy and all of the capital on that side of the industry. And digital capital means digital gold, and that means, oh, I want to buy something without counterparty risk and hold it for 100 years. And what do you do on top of gold? You issue credit. For 300 years, the Western world ran on gold-backed credit. All of our currencies, all sovereign debt, all corporate debt was, in essence, a form of gold-backed credit. So the part of the industry which is most traditional and conventional is digital capital, digital credit, all basically centered on Bitcoin and Bitcoin treasury companies, and that's what our company Strategy does. The other half of the industry is digital finance. And that is all about tokenizing currencies, tokenizing securities, stocks and bonds, tokenizing real-world assets, tokenizing brands, right? It's Joe Rogan token, right? It's a meme coin, but it's also the dollar, right? It's also a stable coin. So that opportunity is, why don't we create $10 trillion worth of stable coin and export our currency to the world and move the money at the speed of light and let the computers trade with themselves 1 million times a second? Why not? And that's also about capital formation. Like, there's 40 million companies in the United States. Why can't they all just issue their own token to raise capital, right? Tokenize your country club membership, tokenize your restaurant, tokenize your hotel chain, whatever, Katy Perry token, Joe Rogan token, everybody token. Right now, you want to go public, it's $40 million in 4 years and an army of lawyers. Well, what if I just wanted to spend the weekend or 4 hours or 4 days and I wanted to raise money for my $2 million company or $20 million company? So capital formation is another killer application of digital finance. The third killer application is I tokenize a share of Apple stock. Okay, why can't I just send Apple stock between India and Pakistan on Saturday afternoon on an Android phone? Okay, what are you doing? You're basically moving the securities market at the speed of light. Everybody wants 24/7, 365 trading. And if I can self-custody my Bitcoin, why can't I self-custody $1 million worth of Apple stock? And if I can self-custody, maybe I can actually get bids from the highest bidder, and I can send $1 million of Apple stock to Singapore and get paid for it. So this entire area of digital finance, this is very entrepreneurial. It's all about innovation. It's much more sophisticated, and that is the other half of the crypto market. Now, the first half of the market, digital capital, digital credit, that's got regulatory clarity now, right? Bitcoin is digital capital. The President of the United States has said it. It's been the Secretary of Treasury. They've all clarified that. So that's pretty much just about issuing traditional, conventional credit instruments, taking them public on capital markets. And if there's any hoops to jump through, it's like, how do I sell Stretch in euros in Switzerland and get the sign-off from the European Union, the Swiss regulator, the exchange, right? But it's not new law. It's traditional finance law. The other part of the equation requires clarity. I mean, literally the act clarity. And so the next big crypto bill is the bill that defines and creates the bright lines and empowers. What can you do with digital currency? What can you do with a digital token? How do I tokenize my share of stock? How do I tokenize, STRC and let it trade at the speed of light in Singapore on the weekend on a crypto exchange, right? It's not clear how to do that yet. Is there demand? Yeah, there's $100 trillion of demand, but I think that there's bipartisan consensus that we need that bill. That bill will get passed. We don't know what the final bright lines in the bill will be, and once the bill is passed, then it'll be clear, what you can do and what you can't do. And so I think that if you're an institutional investor or a conservative investor, right, you can buy Bitcoin, hold it as a store of value. You can buy digital equity or digital credit instruments backed by Bitcoin. That's all fairly straightforward. I think in the other part of the industry, the digital finance part of that industry, it's very driven by technology. It's very regulatory intensive, and then it's unclear. How will every jurisdiction, view every regulation? So it'll be a bit more complicated, but, we're talking about extraordinarily exciting new ideas, an artist, a celebrity that could own their own brand, and a membership that can be tokenized, a ticket that can be transferred. So there are a lot of things that'll happen, and they'll be transformational and innovative, but they'll require more legislation before you're going to find your favorite celebrity do it. They're going to want to make sure they're not getting sued by the SEC.
Okay. And speaking of these new ideas, why should the US government have a Bitcoin reserve?
I think that the key to understand Bitcoin is it is like owning a piece of cyberspace. It is the world reserve capital network. So if you're looking at a world that's going to have hundreds of trillions of dollars of capital on this network, and if we're looking at a world where you're going to see trillions and maybe tens or hundreds of trillions of dollars of credit on top of the capital in the network, right, you might want to own a piece of it, right? What I say is the United States purchased 79% of the land mass of the country. 79% of the United States of America was purchased for $40 million. That's all of the Louisiana Territory. That's all of Texas. That's all of California. That's all of Alaska. We purchased it before we knew there was going to be a Hollywood, before we knew there was going to be a Silicon Valley, before we knew that anybody would want oil, right? We purchased Alaska 1867. It was Seward's folly. He was a fool for doing it. It's got trillions of dollars of oil underneath it right now. So if you can actually purchase the future, if you can own cyberspace, you ought to, right? You know, the Dutch, I think they purchased Manhattan for like a few guilders and glass beads or something, right? So it's very valuable real estate. You know, in the same way that you want to control the world's reserve currency network. The corollary of that is, why should the U.S. actually sell $10 trillion of stablecoins? Because money wants to move at the speed of light, and if we sell the 10 trillion of stablecoins, and if our companies run that network, we will control currency for the next 100 years. And so I think the United States ought to dominate the world reserve currency, and it ought to dominate the world reserve capital network. We're the biggest holder of gold, you know, and if I said to you, would you like to own the majority of the oil in the world? Well, John D. Rockefeller thought yes. And we were the biggest generator of energy, you know, due to Standard Oil, you know, at the turn of the century. And that's why we won World War I and World War II, because we were the energy dominant leader. Well, Bitcoin is digital energy, right? Either you own it and control it or somebody else does. And so I would just make one more point. If the U.S. doesn't, they should encourage U.S. banks, U.S. investors, U.S. corporations, and taxpayers to own it, right? It's not necessary for the U.S. to own it outright, but it's very, very critical that U.S. banks, U.S. investors, U.S. corporations own it and control it, in the same way that it wasn't necessary for the U.S. to own all the oil, but it's pretty necessary for a U.S. corporation to own the oil.
What about the energy side of it? I mean, so many Bitcoin mining companies now pivoting to focus on AI data centers. I've been talking to a number of them. I mean, you've got IREN, you've got CleanSpark, you've got Hive. What are your thoughts on this?
I think that it's been an extraordinary 180-degree turn for the better by the nation. I think maybe the most profound development of technology in the 20th century was nuclear power, nuclear energy. Unlimited, clean, scalable energy, and we shut down the programs for 50 years. And in 2020, if you talk to energy companies, they were going to decommission all those nuclear reactors. And we were asking the question, how do we get this nation to embrace the importance of electricity? And if you want to generate infinite clean electricity, you know, the most efficient way to do it is with nuclear technology. So I think there are two things you want to do with energy. One thing is you want to create digital intelligence, right? And that's what AI is. And we discovered the way you create digital intelligence is you feed an extreme amount of energy, you feed gigawatts of energy through very customized silicon chips, NVIDIA chips, you know, GPUs, and then out comes digital intelligence. Well, you know what the Bitcoin industry discovered is the way you create digital money, digital capital, is you take gigawatts of electricity and you feed it through custom silicon, ASICs, and you generate a wall of encrypted energy to defend the network, and that's what Bitcoin is. So what happened in the last 4 years was the Bitcoin miners were under pressure for using too much electricity by the environmentalists, and we were defending that. We were saying, but you know, we're actually going to create a new banking world order, and it's going to be worth hundreds of trillions of dollars, and so it's a good use of electricity. But we had a hard time winning that battle. Then all of a sudden we have the ChatGPT moment, and people discover that they also need power in order to create digital intelligence, and that turned Apple, Amazon, Facebook, Google, right, Microsoft, and hundreds of millions of Americans into true believers. And that entire debate about whether electricity good or electricity bad just went away, and the entire debate over nuclear power went away. And all of those AI data centers, they desperately needed high power data centers. And you know who owned them? The Bitcoin miners. And so as the Bitcoin miners were struggling with the economics of the industry, because the way the Bitcoin works is it gets exponentially more efficient to mine Bitcoin, and so the margins in Bitcoin mining are decreasing. At the point they were struggling, along came a new buyer for those power rights, and they were able to pivot and monetize those power rights. So AI and digital intelligence saved, the Bitcoin miners. And what are they? They're digital power providers, right? And ultimately, the entire industry the market is starting to realize the future is digital capital, digital money, digital intelligence, right? That's the future, and the way you create it is with silicon and electricity. Mm-hmm. And so if you want your nation to dominate in the 21st century, you better have digital power, you better have digital money, you better have digital intelligence, right? Just like you want air power or sea power or land power 100 years ago. Mm-hmm. And of course, I think what everybody's realizing is now it's a mad scramble to harness hydro and natural gas, but ultimately the solution is nuclear.
Mm-hmm. I mean, we could keep talking about energy forever. I find this part of the story just super fascinating, but I just want to know, what is your message out there to the skeptics?
To the Bitcoin skeptics or to the what skeptics?
To the skeptics of Bitcoin and also just broadly crypto.
My message is if you live in Argentina and you've watched the currency collapse completely every 20 years for the past 100 years, and if your family was impoverished 5 times in the century, and an engineer named Satoshi came along with a way for you not to be poor and destitute, and he said, well, it's no more difficult than just put this wallet on your iPhone and now you don't have to be poor, then you would be utterly captivated by that vision. And that is the plight of everyone. If we go on my hand and say, how many people have lived in societies where they had their property rights and their wealth stripped away from it? It's everybody in Africa, everybody in South America. Brazil's currency collapsed, Argentina's currency collapsed, Cuba's got no currency, Venezuela collapsed. Everybody in the Middle East, people in Turkey right now, Russia collapsed 30 years ago, Russia's collapsing now. Everybody in Ukraine, everybody in China doesn't trust their currency, right? Everybody in Europe doesn't trust their currency. So if you're a skeptic, you must be an Upper East Side trust fund baby, and you're lucky enough to be born rich in the only country in the world where the currency didn't collapse in the last 100 years. And your currency's lost 99.9% of its value over 100 years. The US dollar has debased 7% a year on average for 100 years. So you're probably smart enough, if you're wealthy and a skeptic, to know that you shouldn't store your family's assets in cash dollar bills. You're probably smart enough. You're privileged enough to be able to invest in U.S. real estate and U.S. equities, because that wouldn't work in any African real estate or any African equity, right? Or any North Korean equity or et cetera, any Chinese equity. Wouldn't work in Japanese equities either, right? In fact, I could go on and on and on. Mm-hmm. So you're a privileged person that happens to be rich or happens to have money that's invested in the world's most secure assets in the U.S. But Bitcoin is digital capital, and it's for everybody else in the world that wasn't as privileged as you. For them, it's the difference between 7 billion people living in destitution and 7 billion people having hope. And so Bitcoin is an idea whose time has come. Mm. If you're one of those people, right, you're going to cling to it like a diabetic would cling to insulin, right? Before Bitcoin, every company in the world, everybody in the world is a type 1 diabetic. They cannot store economic energy, right? So if you're in that situation, that is life-affirming for you. It's not a laughing matter. That's why people are so passionate about it. But let's say it's not. You're not one of those people. You happen to be one of the 500 million or a billion elite that lives in a very comfortable environment. It just happens to be the best idea for you. It's the ultimate alternative investment. It's an asset uncorrelated to a currency, uncorrelated to any nation state. It's not an equity. It doesn't have counterparty risk. So the reason you ought to look at it, it's the most valuable real estate property. It's basically buying a piece of cyberspace. And if you if you had a chance to buy an acre of Manhattan in the year 1700, you would have been paying top dollar for it. And then every decade for the next 300 years, someone would pay more. And at what point did buying land in Manhattan ever become a bad idea? It's still a good idea. And Bitcoin is cyber Manhattan. It's one day, 8 billion people want to put their money there, and there's only 21 million blocks. That's 276 by 276 by 276. You can't make any more of it. So our view is it's just a good idea. It's the best idea for a conventional investor, but it's a life-saving idea for the rest of the world.
I like that. Cyber Manhattan. It's almost like a monopoly board, but for crypto. Just on a lighter note, Michael, who are your role models in the financial world?
You know, I think that the people that are inspirational are the industrialists that took a technology and they commercialized a product and gave it to the world. So, you know, you got John D. Rockefeller came along, looked at crude oil and extracted kerosene and eventually extracted gasoline and diesel, right? And we heated our homes and lit our houses, but eventually we ran our cars and our jets and our rockets, right? Kerosene is rocket fuel and jet fuel. And then, you know, take Henry Ford, right? He took a fire and an explosion, explosives in a fire, put it into an engine, wrapped it onto a carriage, and gave everybody an automobile. And he basically gave everybody the ability to travel 100 times as fast and safely. And, you know, history books are full of people that died because they had to walk 100 miles in order to get from here to there, and they caught pneumonia. So Ford gave mobility to the world. You know, I think I could go on with Boeing, and you could go, you know, you could look at the iPhone and the radio and the telegraph, and you can look at the, you know, development of penicillin, antibiotics, and the like. But I think that, you know, and if you look at Bitcoin right now, right? So Bitcoin is this scary, explosive crypto thing. People are afraid it's going to blow them up or it's going to hurt them. Right? What we're doing right now, the thing I'm most excited about, our iPhone moment, is Stretch, STRC. Because Stretch it's a high yield bank account, you know? I want my money to generate 10% tax deferred income forever. Where are all the moving parts? There's no moving parts. What's the product? Comfortable retirement. Well, what's the alternative? Well, 2 or 3%. So you're just going to give me 5 times more money. What do I got to do? Well, what do you got to do to drive a car? Well, believe in the engine. What do you got to do to fly in an airplane? Believe in the plane and the pilot. What do you got to do to get 5 times more than your bank's offering? Believe in Bitcoin and then this issuer strategy. So our job is to get people to trust us and then give them a comfortable retirement or just give them money, right? We're in essence selling money by using digital technology to double or triple someone's yields.
We've covered a lot of ground. Do you want to leave us with a final thought?
2025 is the first year of institutional adoption of digital assets. So if everything that I'm saying sounds new or scary or novel or you never heard it before, that's because 12 months ago, Donald Trump hadn't won the election. And 12 months ago, your bank would have been shut down had they even tried to suggest this to you. So we are living at a very special period where it's just like in 1902, every learned person would have given you 100 reasons why human beings will never fly. And in 1904, it was obvious that we were going to fly because we flew in 1903, right? And so we're like 1904 for a digital asset. It's pretty obvious, right? The president's told you it's a commodity. The cabinet's told you. The head of the treasury's told you. All the banks are moving. But the way it works is the traditional finance world's going to take 10 years. You know, like Vanguard's going to tell you, well, we're afraid of crypto assets. Don't buy it. But, you know, Vanguard's my biggest investor, right? Passively. But actively, right, even though they're the biggest investor in my company, actively they haven't quite got around to processing the fact that, I guess, the digital form of everything is 100 times better than the analog form. Digital photos, you know, you had Kodak, then you had Apple, right? Digital books, digital gold, digital video, digital whatever. We're living through the digital transformation of the capital markets, and people weren't sure that was going to happen a year ago, but now they're happening, and you've got a 10-year digital gold rush. And so the beauty is you can make a lot of money if you are willing to do the work. If you're willing to do the research and spend 10 hours thinking about this, or 100 hours, well, you can buy Bitcoin for a 99% discount. If you wait until the year 2035, your bank's going to tell you, yeah, it's easy, we all support it, it's good, we'll borrow against it. Then you're going to pay 10x more. And if you wait until the conventional wisdom is this is the world's greatest asset class, well, it's going to be $10 million coin, and you're going to pay 100 times more. And so you're living through a technology transformation where you get a massive discount and you get paid a lot if you think for yourself and if you do the research and you come to a conviction over this issue. And I couldn't have said that 2 years ago. 2 years ago or 6 years ago, you know, we need the President of the United States to endorse it, but if we don't get that, then you've got a different future. So this is a special year, and there are special opportunities, and I would encourage everybody to focus on it and come to their own conclusions, because it's the most auspicious development in the capital markets in my lifetime.
And there's some irony in there. I like it. Exciting times. Michael Saylor, it's been an absolute pleasure. Thank you so much for joining me.
Yeah, thank you.
That is the Executive Chairman of Strategy joining me there. For all your market news, Bitcoin news and more, be sure to subscribe to Schwab Network's YouTube page and follow us on social media. I'm Sam Vadas, and thanks for tuning in.